first of all, I wanted to thank everybody for being here tonight. I think this is a great opportunity for us to get great information, great education, and come together as a small business community here in Los Angeles. More important than even talking about these traditional forms of financing is I urge you guys to get yourself informed. And every time there's an opportunity like this, I always feel that people are going to wonder whether or not they're going to have the right information for them or not. But I think what's really important to know is, are you guys asking the right questions, right? Whether it's at an event like this, with your banker, with your local organization, whether it's at a small business chamber, whether it's at a micro lender, if you have an accountant, we want to make sure you guys are asking all the right questions for your specific business needs whenever you have any opportunity to talk about your small business. So as Eduardo was saying earlier today, there's two kinds of financing that people normally go down the path of using to fund their small business. One is the non-traditional, which he talked about, which includes a lot of those family loans. Some of those bad things he talked about, which may not necessarily be the best way, which is using your tax money to fund your business, or some other opportunities as you're growing bigger, which is issuing stock to different investors. The traditional methods, which are available, not only at Wells Fargo, but at a lot of the different institutions across, Los Angeles and across the company, are very familiar ones. But you'd be surprised how many folks don't know not only the resources available at the traditional financial institutions, but also within their communities. So if you look at up here, we have a couple of the basic ones. So at banks, we normally have a couple very basic ones. Normally when people are starting their business or growing their business, the basic ways to start that are through lines of credit. And lines of credit are issued, for very small business owners all the way to corporations. Wells Fargo, Bank of America, and other banks offer lines of credit as small as $1,500 for that mom and pop shops when you're starting. And one of the important things is that a lot of times customers are offered this at the beginning, but they don't take it, right? Because they're like, I don't want to take any credit out and be in debt. I'll take it later when I need it. The big mistake with that is a lot of people can't get it once they need it because they're over debt in their debt to income ratio.